Good morning, Ed.
Good morning, Mitchell.
Good morning, everyone. Welcome.
Morning.
Welcome back. I think more than half the crowd today is actually participating in prior year's forums. So we're glad to see we have record attendance expected this year. So we're excited that people are actually excited about coming here. So thank you very much. About 3 years ago, Freshfields got together with Columbia's Richman Center to create the Global Business Forum. And our idea was to create a venue where people involved in global business, operating global businesses, could get together and actually talk about the things they worry about all day, the things they think about, opportunities to their business, threats, how they're operating in the global environment. And last year, the theme was how technology was changing the way we do business, which we thought was very topical, very exciting. And it was. We learned about things like AI, artificial intelligence, fintech. Then there was one panel that was about technology and agriculture. And we saw some slides there that showed us by 2050, the world population was growing to 10 billion. And not only that, the middle class was exploding. We started to think, technology, that is really, really important. But there's this other factor, demographics, economic changes, geographic changes. And when you take those two and put them together, all of a sudden,
you get a chemical reaction, and we call it disruption. And that's really a lot of what we want to talk about today is these drivers of disruption, technology, mixing with demographic changes, producing a disturbance in an industry, disruption, and we're really interested in the aftermath of that disruption. How do industries evolve? In particular, how do incumbents respond? Do they die? Do they reinvent themselves? And we're also interested in how does a deal environment shape itself in response to disruption?
So let's start with the deal environment. This is a chart that, if you've been here in past years, you see every year. Last year, we're standing here. We had come off 2015, record year, banner year for M&A. And then 2016 was down a little, but coming off a record year, you say, well, is this really the start of a trend, or is it just, it's really hard to replicate 2015? And, we said, let's wait and see. Well, we're starting to see, we are seeing what seems to be a little bit of a trending down, maybe deal activity finding some normalized level. But certainly the second half of last year saw a slowdown in deal activity. And that, again, it's still a pretty good year, but it does seem to have a little bit of that trend going on. But Ed, what I find most interesting is that red line at the top. When you look at that red line, that represents how much of the activity is cross-border. It's global activity. And when you see that trend for the last 10 years, you see more than a third of activity are companies going across borders. And that's why we're here.
Yes, like 3 years ago, it was that our shared interest in global business and the flow of capital across borders that got us to thinking, why don't we put Columbia together with Freshfields and think about what are the cool things happening in the world? And when we had our first meeting 2 years ago, we spent a lot of time talking about China. Everybody's interested in China. We're thinking about deals into China and deals coming out of China, China outbound. So in preparation for today, we thought, let's take a look at how China outbound has evolved. And we were really surprised to see that for the first time ever, or at least as long as we can remember, we see a substantial downturn in China outbound, in the amount of capital flowing out of China into other countries. Now, what's interesting here is it's not the case that China is reducing its investment in all parts of the world. It turns out there's one part of the world that has become substantially less attractive to Chinese investors, and it turns out that part of the world is here.
So last year we were here and we saw this huge jump and we thought, here we are, we're trend spotters. We've seen this is the future, $70 billion of investment from China into the US. This can't be a one-time event. This is going to last and it's going to continue. And then all of a sudden, it just seemed to hit a wall and stop. And we're really struggling. What could have happened? Why? Why would that end?
It's a puzzle. We hope we get some clarity today.
So maybe we'll learn something today. But when you go back to that deal activity, even though deal activity is trending down, where you see it really, really strong, going back to some of the stuff we discussed last year, it's technology. So M&A and technology has continued to be strong year after year, and it's not small deals, it's big deals. We're seeing deals, in the $1 to $5 billion range, $5 billion plus. and we try to extrapolate the first quarter of this year and look at what that might mean. And again, we see another great year going on. But when you drill down even further, what you're seeing, you see all that activity, you think, oh, it's the tech giants. It's Google, it's Facebook.
It's Microsoft.
But it turns out it really isn't. The activity is coming from non-tech. The 2/3 of the tech acquisitions were by non-tech businesses.
And this is not new. If you go back 5 years, you see this constant trend that 5 years ago, about 50% of tech acquisitions were done by these old fogies, these incumbents not doing tech, suddenly becoming interested in tech. And now it's about 2/3 of all tech acquisitions. So it's a pretty impressive trend. But you can dig deeper and you can ask, in which industries is the tech-related acquisition activity moving the fastest? And none of us are surprised by that purple line. If you were here last year, we spent a lot of time talking about how tech is transforming the media industry, cable, telecom, TV generally. We were also surprised to see that hockey stick in red, industrials, that technology is really transforming that sector of the economy. Now, we thought these are pretty amazing trends. Tripling of deal volume in industrials. Well, then we thought, well, last year we spent a lot of time talking about fintech, and how fintech is transforming the financial industry. So we overlaid that onto the chart, and it makes everything else look boring. The scale of activity, the amount of deal flow in the tech sector is just enormous, and it makes every other industry look like it's standing still.
So when I look at this and try to say what's going on here, what I come up with is disruption, right? We see disruption coming. Everyone in every industry is worried about disruption. They're trying to figure out, well, how do I get ahead of the curve? I go out and buy some technology, buy a disruptor. And, what we've seen is that, people seem to be really afraid of this threat of disruption.
Well, are they? KPMG asked a bunch of CEOs, like, well, how do you feel? Do you feel that your industry is being changed around you and you're being threatened? Or do you see the possibility of disruption as an opportunity to change your own industry? Well, CEOs, optimistically, I think 2/3 of them say, we see ourselves an opportunity in disruption. And not only that, you can ask the CEOs again, not only that they see disruption as an opportunity, they see themselves as the primary disruptors. So you ask those same CEOs, like, who is going to change your industry? Is it going to be the digital giants, the Alibabas, the Apples, the Googles, the people we talk about all the time on the pages of the Wall Street Journal? No. The incumbents say the future of disruption is us.
And the idea of self-disruption, of companies transforming themselves and actually being self-disruptors, we thought is fascinating. So today we have Susie Wong. She's the head of North American M&A at Morgan Stanley. And with her, she has panelists from Cargill, Honeywell, a few different companies that have disrupted themselves, that have looked in the face of technology and demographics and said, we need to change. And they've done it really successfully. So we're going to learn about how some of the largest companies have actually disrupted themselves.
Now, Mitchell, if anyone's keeping track, you probably heard him say disruption, several times per minute. And disruption. I mean, everybody seems to be disrupting.
Right, but so what we're seeing with this disruption is also industry lines blurring. So we're seeing, a great example, General Motors, right? This stodgy automobile manufacturer. How much older economy can you get than that? And they went out and they made a huge investment in Lyft. What's Lyft? Lyft is a competitor to Uber. It seemed at the beginning not too many people were taking Ubers today. But in fact, Uber has been changing the economy, and GM wants to get in on this. They don't want to just sell you their cars. They want to drive you around. They want to participate in the sharing economy. And you go back a little, you look at what's happened in the retail trade, right? Walmart, biggest brick and mortar retailer around. Well, a few years ago, they went out and bought Jet.com. Why? Because they were looking at Amazon and said, well, how are we going to compete? On the other hand, Amazon, total role reversal, what did they do? They went out and bought Whole Foods, bricks and mortar, and they're opening their own stores. So we're seeing this all, and again, going back to this disruption.
There you go again, disruption. So industries incumbents are disrupting themselves, you said. Incumbents think they're going to disrupt their industries. Industry lines are being disrupted. Now, it's become the case, it seems like who isn't disrupting? If we're all disrupting, then none of us are really disrupting. Maybe it's like, what's Silicon Valley's emptiest buzzword. I guess I'm an academic, and so when I think about all the examples Mitchell just gave, and I don't mean to be harsh here, but every time you gave an example,
been harsh before.
All I think about is you're talking about a business finding a better way to provide a better experience to its customers. Why call it disruption? It's the oldest, strategy in the books.
So I think that's a great question, and today we're actually going to hear two different versions of it. In the morning, the first panel going to talk about disruption, being led by Paul Leinwand, who heads strategy at Price Waterhouse. And he has a group of panelists that are all in industries or all in businesses that are either disrupting or in industries that are being disrupted. And I think they probably see a little more heft to that word disruption than you might as an academic. But on the other hand, in the afternoon, we're going to have David Sabol. David is the global chief executive of Y&R, the huge global marketing and advertising company. And David's a bit of a contrarian. He's going to sound a lot like Ed just sounded, which is he's going to say, "Oh, technology. Why do you talk about technology? As soon as you have a new technology, it means it's old." And disruption. People just focus on these words. They don't really focus on what's going on. Don't look at what Amazon says. Look at what it does, which is great customer service. But he'll also argue for us that Amazon isn't really a disruptor. They're a great customer service business. You want to look at the retail industry, and when it was disrupted, you have to go back 150 years to Sears Roebuck. Remember that big catalog? What did Sears Roebuck want to do in the 1800s? They wanted to sell everything to everyone, everywhere. And when you think about that, it starts to sound a lot like Amazon.
Well, everything to everyone, everywhere. Now, what's perfect about that way of framing it is that it focuses on the consumer, on your customer. And it kind of takes us to the main event today. The main event is thinking about how are our customers, how are consumers changing. There's been some massive demographic shifts that are radically changing the kind of consumers that businesses are trying to reach. Now, one of those is not a surprise to anyone here, is the rise of the middle class. We all know that in developing countries, particularly in China, we've had this radical increase in the size of the middle class. But I don't know how many of you knew, I was surprised to learn in preparing for today that the middle class in about 2 years will account for 50% of the global population. Just imagine how, that's a stunning increase. But even more stunning is that in 10 years, the size of the middle class will have another 1 billion people added to it. Now you think about it, you take a step back and think, well, gosh, that's a huge effect on demand for goods and services, a huge strain on global resources, but also it's a huge issue for companies going global. There are a lot of business opportunities potentially abroad.
And where's that middle class growing? Not very much in the developed countries. It's really growing all over the world, which means that the consumers we're looking to deal with and the businesses and the companies we're looking to deal with are all over the world. This morning we have with us Gish Jen. Gish is an author. She wrote a book last year called The Girl at the Baggage Claim. And then she tries to explain the East-West culture gap, how the differences in culture play out in a number of different arenas, including education, and most importantly for us, including business. What does it mean for when we're doing business, for how different countries and companies in different countries look at things very, very differently?
So Mitchell, we just talked about one of the seismic shifts in demography, which is the rise of the middle class. There's another less happy development is the aging of the population. Today, people over 65 account for less than 20% of people living in the United States and of people living in China for that matter. But within the next 35 years, people over 65 will account for around 30% of China, 30% of the United States. Now, the aging of the population has a pretty big implication for some countries more than others, and that's the declining workforce. Now, we all know that in Europe, Japan, declining fertility rates are going to translate into declining workforces. And that's depicted up here by the green and the blue lines, blue being Europe and green is Japan. What struck me, and I think this is the one slide that really surprised me most in preparing for today, is that red line, is that who would have thought, maybe many of you did, but not me, who would have thought that within the next 50 years, maybe next 25, China is going to look a lot like Japan, at least along this dimension, which is declining workforce. Now, we have Ruchir Sharma, an economist at Morgan Stanley, to talk about this among other demographic patterns. But a cool, it's like maybe disturbing idea here is just that, and a thesis he's going to develop is the idea that it's very hard for a country to have meaningful economic growth when it's losing its workforce.
So now, who will fill those jobs? Last year suggested maybe artificial intelligence, robots will take those jobs. But when you look at it, who's going to fill those jobs? Well, obviously, it's the next generation, right? And we're seeing that already. Millennials, very important part of the workforce, but you roll forward 15 and 20 years, millennials are the workforce. And we hear so much about how millennials are different, they work differently, what their habits are, what their ambitions are, and we sort of really hear a lot about that. And one of the questions I'll ask the audience, just think about for a moment. If I asked you millennials, they work very hard. Would you agree with that statement, or would you disagree? So,
no voting.
No voting. Just think about it for a minute, because Beyond.com did a survey. In fact, they did 2 surveys, and this was really interesting. They surveyed millennials, and they surveyed people in HR, people who are hiring. So the new workforce and the people hiring that workforce, and they asked them a few, to look at a few statements. That was one of them. And what was really amazing is how different the responses were. So if you were a millennial, 86% of the millennials said, yeah, of course we work hard. Absolutely. But when you went to the HR folks, only 11% of that, meaning 89% didn't agree with that. So you're seeing a real disparity.
The disparity is nowhere starker when we think about loyalty. HR professionals were asked, in your view, are millennials loyal to their employers? It was hard to find an HR professional who thought that was true. So you can see that here, looking green. 1% of HR professionals thought that millennials are loyal. But if you go to the millennials and you ask them, are you loyal to your employer? You'll get a yes answer 82% of the time. So it's hard to imagine a starker difference in perceptions between employee and employer.
So what's going on here? Is it poor self-perception on the part of millennials, prejudice on the part of HR? Maybe we just define things differently. We have a panel this afternoon led by Greg Fleming. Greg is the CEO of Rockefeller Asset Management, but he's brought together a group of people who are going to discuss just this, not just millennials, but the entire changing workforce, the changing demographics in the workforce, and the changes in the workplace, where people work, how they work, and hopefully we'll learn a lot about what it means for how we run our businesses. But Ed, I look at that and I think, what are these millennials going to do?
I see them all the time. A lot of my students are millennials. They come to me for career advice, but look at me. I'm a professor. I can't really do much to help. They're interested in technology. They're interested in innovation. So coming in today, I thought, okay, this is an opportunity to ask you, Mitchell, you were an investor for 8 years. What should I tell my students when they ask for career advice?
Well, Ed, I would say there's just one word.
Plastics.
50 years ago, that's probably right. Today, blockchain. So last year we had a panel, and we had Martin Brand. Martin's a partner at Blackstone, and he was asked this question: where is Blackstone looking to invest? Where do they see the greatest opportunities? And he said, we think the blockchain is a truly transformative technology. And all of a sudden, the light went on. Blockchain, of course.
Well, the light went off for me, because what the heck is that? All right, we all heard about blockchain, we've heard about Bitcoin, but then you kind of bring together all these paradoxes that who created blockchain? Satoshi Nakamoto. We don't even know who that is. It's almost like some superhero, somebody out there in the atmosphere. Blockchain, or at least Bitcoin, it requires miners, and they don't mine anything. It creates currencies that aren't currencies, they're crypto. It has ledgers, but they're distributed. And what the heck does that mean? And so when I put all those things together, I thought, man, I have no idea how this works, why it's valuable. And I thought, well, here's the acid test. Can I turn to the person on my right and explain how blockchain works and what it's good for? And I wonder how many of you would feel comfortable turning to your neighbor and doing the same.
So let's, just by a quick show of hands, let's break into 2 groups. How many people in this room think they understand blockchain well enough, they understand the technology, and they understand the applications? Not just that it's going to be big, but how it's going to be big and how it's going to change, and could explain it to Ed, which is tough. Okay, let's see. Okay, keep those hands up because we may be calling on you.
Yeah,
we had
we have
a
room on the
drop
panel.
out in the panel, so just wait there. You may be back on. But okay, so how many of you are the rest?
How many are like Ed?
Okay, so it's still most. So this reminds me of the very dawn of the internet when Al Gore first invented the internet.
Those are great years.
Yes. I go back to 1994, 1995, and I remember watching the Today Show, learning about the internet. And here's what they were saying.
That little mark with the A and then the ring around it.
At?
See, that's what I said. Katie said she thought it was about.
Yeah. Oh.
But I'd never heard it.
Around
I'd never
or
heard it
about.
said. I'd always seen the
Right.
mark, but never heard
Yeah.
it said. And then it sounded stupid when I said it. Violence at NBC.
Just what is this main artery of the information superhighway?
Every business, no matter how large, and no matter how small, will be on the internet in the year 2000. It's the primary way that people will look up information. It will replace the yellow pages as we know it today.
Are a lot of people just getting on to the internet because they feel that they have to get onto the playing field, so to speak?
Well, it's very hip to be on the internet right now.
All right. So Mitchell,
A young Bill Gates, very hip.
all right.
Good.
You got me at hip. Okay, so I'm willing to admit, Mitchell, that someday I might be like some of our audience members and I might understand blockchain and I might feel hip because I understand it. But honestly, coming in here as an academic who's naturally skeptical, I thought, I may not understand blockchain, but everyone I know, especially every millennial I know, is into it and trying to find a business that applies it. So I thought, okay, well, the acid test of this technology is to find out what it's good for. So I asked some journalists and some tech-savvy folks, said, well, what is blockchain good for? And they said, well, it's good for two things. It's good if you want to buy illegal drugs. It's also really good if you want to hack someone's computer and demand ransom. It's a perfect way to get paid on account of ransom. And I thought, all right, well, great, Mitchell. Now you've organized an afternoon about a technology that's great for crime.
Well, you're always the cynic, Ed. Believe it or not, blockchain is going to be great for a lot of things. And just think about it. Think about the supply chain. People care about where they get their food. Is it organic? Is it fresh? Where was it grown? So there was a great story that I read. It was the chief of procurement at Walmart. Walked into a meeting, took a bag of mangoes, put it down in front of his staff and said to them, can you tell me where these mangoes come from? And to their credit, they did. 2 weeks later. Took them 2 weeks. With blockchain, that should be 2 seconds. And beyond just food, you go to how much we care about where all our goods and services are being produced, who's producing them, how they're being paid, and then go further. Fintech, you like fintech, just the backbone of securities trading and trading property. There are so many different applications.
All right, you're getting me excited. Okay.
So today, we have with us Nick Thompson. Nick is the editor-in-chief of Wired Magazine, and he has a panel that's going to help us understand. He's going to help explain to us what blockchain is, and he has with him Joe Lubin, one of the founders of Ethereum. So we're going to get people.
There will be at least one skeptic on the panel. It rain a little bit on the parade, we hope.
Okay, so we're going to have a panel. Hopefully, by the end of the day, we're going to at least be able to understand what blockchain is a little better than when we came in. And then ultimately, at the end of the day,
we'll be looking ahead. We've got a great panel. Steve Leisman from CNBC will be leading a group of sort of futurists to think about, what are the set of issues that we will be talking about this time next year when we get together again.
So, again, thank you all for coming. We're very excited to be here. We have what we believe is a great day. We look forward to seeing you during the day. And with that, Ed, would you like to introduce our first panel?
Thanks, Mitchell.